Let's start with a really basic overview of commodities. All commodities are priced in US dollars. Yes, you can use pounds to buy them, but you have to translate it in dollars and buy that. So as a rule of thumb, when the dollar falls, commodity prices tend to go up. So you have to, as an investor, have quite a good view about what's going to happen in the dollar. And when we come to talk about our portfolio next week, you'll obviously hear us talk about a view of the dollar because it's absolutely important because there's so many dollar assets in the world and commodities are the biggest chunk of them. In fact, commodities are actually, as a whole, bigger as a group than all of the equities in the world and bigger than all of the bonds in the world. Not many people think that. But of course, commodities are dominated by oil and energy. That makes up about 83.4% of the overall commodity market. And then precious metals make about 6 or 7% of that. And then industrial metals, which is things like copper, nickel, aluminium, etc., 4 to 5%. And there are other stuff like soft commodities like wheat and sugar and coffee. But we're not really going to talk about those or rare earths because they're such a small proportion of the overall market. And the things that are really investable for us are things like copper, gold, oil, etc. And those are the things we'll be focusing on more than anything else.